Okay, so good evening, everyone. Good day. So our topic for this is very interesting because we're going to discuss the foreign currency investing. No? So again, investing is currency involved, buying the currency of one country while selling that of another. So this is done through the foreign exchange market or yung tinatawag nating forex. Na? So forex trading always happens in pairs. No? For a transaction to be complete, one currency has to be exchanged for another. Let's say, for example, no, you might buy US dollars and sell British pounds or vice versa. So while you could technically exchange any foreign currency that's traded on the market exchange for another, it's more common to trade using pre-establishing pairings. Okay? So to give us more details about the topic, let us all welcome our presenter. Go ahead, sir.
Good day, everyone. We will talk about foreign currency investment. We are going to discuss about definition, advantages and disadvantages, importance, and a sample of foreign currency investment. What is foreign currency investment? Investing in currency involves buying the currency of one country while selling that of another. This is done through the foreign exchange market or forex. Forex trading always happens in pairs. Investing in foreign currency can be a great way to diversify your portfolio. Foreign currency trading, or forex for short, is a little more complex than trading stocks or mutual funds or soaring up your investment strategy with bonds. Learning the basic, however, can give you a solid foundation to build on. If this is an asset class you are interested in exploring, this guide walks you through everything you need to know to get started with investing in currency. If you have questions about Forex or other types of investment, a financial advisor can help. What are the advantages of foreign currency? Number one, globalized marketplace. There are no geographical or localized constraints in foreign exchange market. Investors are free to trade in currency pairs from across the globe. Flexibility. Since there's neither any regulatory authority nor any cap on the money that can be traded daily, foreign exchange market offers a lot of flexibility both to rookie investors as well as seasoned players in the market. Full transparency. Markets are usually not immune from unscrupulous practices like insiders trading and other malpractices that tilt the advantage toward a few to the detriment of a vast majority of individual investors. Number four, wide range of trading options. With currency of virtually every country up for trading, there are multiple trading options. Based on their priorities, traders can either enter into spot trading or future agreements. Number five, low transaction costs. Most types of trading, whether stocks or commodities, include a certain commission or transaction fee, which varies based on several factors. Number six, market volatility. Function. Fluctuation in foreign exchange market usually depends on external factors like political turbulence, economic growth, stability of the country. investors' confidence, any government policies or regulations, or natural disaster. Number seven, high-tech marketplace. Since foreign exchange market operates 24/7 across six continents, 100 plus countries, and dozens of different time zones, and the daily transaction volume is enormous. It requires seamless and uninterrupted connectivity for minimizing any lag. Number eight is leverage. Foreign exchange market has the highest leverage among all asset markets. It allows the investors to take risks and increase the profit margins exponentially. Number nine is conclusion. By being truly global and operating across multiple time zones, foreign exchange market offers great liberty to traders. There are other advantages as well, such as range of investment options, very low transaction fee, zero or negligible commission, and demo accounts for hangout practice. What are the disadvantage of foreign currency? Number one, counterparty risk is an international market. Therefore, regulation of the foreign currency market is difficult issue because it pertains to the sovereignty of the currencies of many countries. This creates a scenario wherein the forex market is largely unregulated. Therefore, there is no currency in terms of helps to determine a nation's economic health and hence the well-being of the people residing in it. The exchange rate is also important because it can help or hurt specific interests within a country. Exporters tend to be helped by a weak domestic currency because they will sell more abroad, while consumers are hurt by a strong currency because imported goods will be more expensive for them. What are the samples of foreign currency investment? The most popular way to invest in currencies is by trading currencies in the forex, but investors can buy mutual funds like ETFs or ETNs. ETF is an exchange traded fund is a type of investment fund and exchange traded product like they are traded on stock exchange. ETN is a bond issued by a large bank or other financial institution. The company promises to pay ETN holders the return on a index over a certain period of time and return the principal of the investment maturity. Other samples: USD is the designation for the US dollar, EUR is the designation for the euro, GBP is the designation for the British pound, and JPY is the designation for the Japanese yen. Forex transactions are quoted in pairs of currencies because you are purchasing one currencies with another currencies.
Okay, go ahead.
Good evening, sir. Good evening, classmate. Here's are the example of how to convert currency. Example number one. John has 15,000 US dollars that he wants to convert into euros. How much in euros will have received? Uh, ito yung yung rate ni euros. Ang ng 1 US dollar equals to 0.90 euros. So ang gagawin natin, we will use the fraction method to convert 15,000 US dollar over 1 times to kung anong rate ni euro. Tapos yung nasa baba is 1 US dollars. Kaya nasa baba si 1 USD para makancel sa 15,000 US dollars. So, ang mangyayari, ita-times na lang natin yung nasa taas para dito mas madali natin makuha kung magkano natin may convert. So 15,000, so after natin makancel si USD, US dollars, ito times na lang natin si 15,000 times 0.90 euros equals to 13,500 euros. So hindi pare-pareho ang rate kada araw kaya mas mabuti na i-monitor natin kung saan mas mataas para doon tayo magpapa-convert sa kung alin yung mataas na rate. Example number 2. Kim has 30,000 Canadian dollars that she wants to convert into US dollar. How much will she receive in US dollar? So ang rate naman ang gusto naman mangyari ni Kim, yung Canadian dollars na ay ma-convert sa US dollar. Ang ano naman na is 1.31 ang currency exchange rate. So ang gagawin natin, same pa rin fraction method ng 30,000 times over 1. Then yung times to 1 USD over 1.31 Canadian dollars. So anong nangyari, nabaliktad naman yung unlike nung nangyari doon sa first example, si rate naman yung nandito sa baba na 1.31 CAD para makancel natin yung nasa 30,000 Canadian dollars. So ang mangyayari, divide na mangyayari, hindi siya multiplication. So after natin makancel si Canadian dollars, 30,000 divide 1.31, ang sagot ay 22,900.76. Saka naman natin siya ita-times sa 1 US dollar. So magiging sagot natin ay 22,900.76 US dollars. Example number 3. Number 3, Lawrence wants to buy a laptop online. Store XYZ sell it for 350 GBP. GBP is a British pound. And store ABC sells is for 385 euros. Given a currency exchange rate of 1 GBP and euro equal to 1.6, which stores offers the best deals? Dito naman ang inaano naman ni Lauren kung saan siya makakamura. So ang gagawin natin ay 1 GBP over 1 euro equals to 1.16 times 1 euro. So, i-multiply natin siya sa both side sa 1 euro. Then yung nasa left side cancel sa denominator, kaya makukuha nating answer sa left side is 1 GBP, then i-multiply natin sa 1.16 times 1 euro equals to 1.16 euro. 1 GBP equals to 1.16 euro or 1 British pound equals to 1.16 euro. Para makuha natin kung aling store ang nag-over na mura, 350 GBP over 1 times to 1.16 euro over 1 GBP. So, ang gagawin natin, kakancel natin si GBP. GBP yung nasa taas, saka yung GBP nasa baba. Kaya nasa baba yung 1 GBP para mas makancel natin yung GBP na nasa taas. After makancel, i-multiply natin yung 350 times 1.16 equals to 406 euro. So let's compare the store kung alin yung nag-o-offer na mas mura na same unit lang naman ang binebenta. Si ABCI 385 euros at si XYZ 406 euros. Mas mura si ABC Store kay XYZ na same unit lang naman ang binebenta. Thank you po.
Okay, so can you hear me? Can you hear me? I've encountered problem actually with my internet. Okay. Okay, so again, as I mentioned, I encountered problem with my internet connection. No? But by the way, I'll just want to add additional inputs no, related to the subject or to the topic no, that our presenter mentioned and discussed. No? So a while ago, I've mentioned about the forex trading always happen in pairs. No? So the foreign currency are typically grouped. No? So the major pairings, no, let's say for example, this group includes the most frequently traded currencies, no? As what our mentioned, as our presenter shares a while ago, no? So the major pairings, US dollar, euros, the Japanese yen, and British pounds, no, are typically included, no? For the minor pairings, this group are also includes many of the frequently traded currencies in the major pairings category with the exclusion of US dollar, okay? We have also what we call the exotics, no? Here, you'll typically have pairings of a heavily traded currency against a thinly traded one. So let's say, for example, US dollar may be paired with the Hong Kong dollar or Singapore dollar. Another, of course, is the regional pairings. No? In this category, currencies are paired together based on region. So you might see ASEAN or European currencies from the same geographic regions being exchanged for one another. So why to invest in currency? No? So forex trading attempts to capitalize on fluctuations in currency values. No, it's similar to trading stocks. No, you want the currency you buy to increase in value so you can sell it at a profit. So your profit tied to the currency's exchange rate, which is the ratio of one currency's value against another. So when looking at pairings, you may want to consider how they're ordered. No, let's say for example, in US dollar and GBP, no, pairing, USD or US dollar is the base currency while GBP is the code currency. So the exchange rate is used to calculate how much you have to pay in the code currency to buy the base currency. Anytime you buy a currency pairing, you're buying base currency and selling code currency. Now, the mechanics of investing in currency, number one, stocks and mutual funds are traded on a centralized exchange such as the Nasdaq or New York Stock Exchange. No? Forex is not. Instead, it's traded through the foreign exchange market, which is managed by banks and other financial institutions. All trades take place electronically and trading can be done 24 hours a day or 7 days a week. So forex trading can be done through a brokerage. No? There are three ways that you can trade foreign currency. Number one, we have what we call the spot trading. No? In this kind of trade, currency pairs are exchanged when the trade is settled. And this is essentially instant trading, and the spot price represents the price at which a currency can be bought or sold. Another one is the forward trading. So when you trade forex forward, you agree to buy or sell foreign currency at a set price on the set date in the future. So the spot price will be settled and you're insulated from volatility with when it's time to trade. We have also what we call future trading. Future trading is similar to forward trading with one key difference. In a future trading contract, you're legally bound to make that trade. The price of the contract is based on the foreign exchange rate of the currency involved. So once you've decided how to trade, you determine whether to buy or sell. So the exchange rate may influence the decision, because if you're buying a pairing, you accept the base currency will go up in value. If you're selling a pairing, you're selling the base currency and buying the quote currency. So you're also hoping the base currency values will drop so you can buy it back at a cheaper price. How about the bid and ask? There are two other forex trading terms every investor should know. Of course, yung bid and ask. The bid is the price at which a broker will buy a foreign currency pair from you. And the ask is the broker's asking price for a particular currency. So the difference between the two prices is the spread. Knowing what these terms mean can help you read forex codes and understand the price of a trade. So a while ago, our presenter give us a quote of a pairing, no, like yung euro to US dollar. Let's say euro is 1.25, 45, then USD is 1.2572. So the first number is the bid, no? And this kind of pairing, the broker would pay the 1.2545 USD for 1 euro. So the second number is the ask, so which means the broker wants to pay 1.272 for 1 US dollar. Now, maybe somebody are really interested, no, in forex trading. But we need to understand what will be the pros and cons of forex trading, or what will be the advantages and disadvantages of forex trading. Investing in currency can offer several advantages, of course. Now, number one, convenience and accessibility, because stock market exchanges operate during set hours, while you can trade pre and after market. It isn't 24/7, because forex trades, on the other hand, can be made at any time of the day or night. No? Another is diversification. Diversifying your portfolio can help manage risk, because foreign currency is an alternative asset class to the traditional mix of stocks, bonds, and mutual funds. Of course, the lower another thing is the advantages is lower cost. No, unlike trading stocks, there may be fewer commissions associated with trading foreign currencies that allows you to hold on to more of your returns. And this is one main drawback to investing a currency. Ang ano yung drawback or yung disadvantages or yung cons, no? Of course, the number one drawbacks to investing in currency is the potential volatility. No? While forex trading can be lucrative, there may be more ups and downs than the stock market, and that could create a step learning curve for beginners. So the risk may also be higher compared to other investment strategies. So it's important to assess your risk tolerance carefully before jumping in. So the bottom line here is investing in currency may be new territory, and it's important to understand the ins and outs of how it works. It's also helpful to have some perspective on how foreign currencies may be impacted by movements in the broader stock market. Geopolitical concerns and economic climate in the countries you're interested in investing in. So the more you know, the better for making informed decisions when making currency trades. So some tips for investing, no? You need to consider talking to a financial advisor about investing in currency and whether it's good fit to your portfolio. So finding a qualified financial advisor doesn't have to be hard. Smart Set free tool, no, matches you with the 3 financial advisor in your area, and you can interview your advisor matches at no cost to decide which one is right for you. So if you're ready to find an advisor who can help you achieve your financial goal, so get started now. You need also to consider investing in currency exchange traded funds if buying and selling on the forex market seems too complicated. So these funds trade on exchange like a stock, but they tend to be more tax efficient than other mutual funds because foreign currency ETFs may also carry a lower risk factor compared to trading forex through a broker as these funds are actively managed. So I think that's it.